Good afternoon. You're watching the Business Today show. This is the market closing show with me, Sakshi Batranvi, getting you here all the closing action on Dalal Street. But first up, let's take a look at what's hot in the corporate and the financial world. Aam Aadmi protected from LPG crunch as the government prioritizes domestic gas supply. Under the Natural Gas Control Order, 100% supply is assured for piped gas and for CNG, while industrial users face cuts to secure alternate gas supplies amid Hormuz disruption. Markets rebound sharply after days of sell-off. We have seen the Sensex now jumping over 600 points, while the Nifty has also crossed the 24,250 odd mark as cooling oil prices and Trump's remarks on the Iran war lift global sentiments now. Autos, financial services, consumer durable stocks are buzzing in trade. Fertilizer stocks rally on government move to secure gas supply for urea plants. Chambal Fertilizers, RCF, Fact and Deepak Fertilizers are all shares that have surged up to 20% in trade after the centre has capped gas allocation to ensure fertilizer production and global disruptions. Gold and silver prices rally tracking global cues and a sharp fall in crude oil. On the MCX, gold prices jumped by 1,800 rupees to now trade at 1.62 lakh rupees per 10 grams, while silver prices have surged nearly 10,000 rupees to now trade at 2.77 lakh rupees per kilo. Reddington jumps nearly 15% as Bloomberg reports indicate that Apple now makes 25% of its iPhones in India, assembling about 55 million devices last year as the tech giant speed up its supply chains shift away from Chennai. Right, let's straight away look at this big breaking that's coming in on your screens. The cabinet has eased the FDI rules for border countries. The sources have told us that Press Note 3 has been modified. Curbs have been relaxed. Sources are also indicating that electronics companies had been seeking relief and Chinese investments into India are set to rise. Sources also say inbound investment rules have been eased as well as far as the FDI norms are concerned, and therefore you do see some electronic manufacturing companies like Dixon Tech have risen in the trade today. Almost a 10% surge has actually come in onto this one as well. Remember, we are actually seeing the cabinet has been easing FDI rules for border countries. Let me go across to my colleague Chetan Bhutani, who's standing by to give us more details on the same. Big news coming in from the cabinet. Press Note 3 has been modified. Curbs have been relaxed as well. There are easing rules as far as the FDI is concerned for border countries. We're already seeing some reaction on the stock markets, Chetan. Dixon Tech has shot up 10%. What exactly is this news all about?
Well, Sakshi, if you remember that India-China Galwan Valley clash that happened in 2020 post that to protect its economy, India banned nearly 200 Chinese apps and actually made stringent norms under Press Note 3 for building or getting investments in India that share land borders in India, specifically with China, in order to counter the issues that were facing in the Galwan Valley. But now the government realizing that, yes, it's time to open up the economy and get more investments in the country. The government has been, over the past 1 or 2 years, has been easing FDI with various countries. Plus, we have been having FTAs with different countries. So why not probably ease land issues with China and open up investments along with certain riders? Sources also mentioning us that today cabinet approved this particular proposal, which in fact would be coming along with riders. 100% investment under Press Note 3 will not be allowed. However, certain riders and for certain companies it would be opened up, and slowly and steadily the government will gradually open up to other sectors as well. But yes, it's a first step in the right direction is what a lot of people are saying, because it was a need of the hour to get more investment, especially from China, into the Indian market as well.
All right, thanks a lot then, Chetan, for getting us all of those details. Viewers, we are seeing not just Dixon Tech, but even, auto ancillary names also pulling up. Uno Minda is up by about 3.5% odd, but the sharpest spurt has actually been seen on Dixon Tech as well. You're looking at the auto index itself shoot to a day's high point, over a 3% of an uptick that is actually being seen amidst this news flow that's just coming in that would ease a lot of the FDI norms at this point in time. Look at Dixon Tech as we are speaking. It's further inching up higher, now up almost 11.5% in trade. This is after the cabinet has approved easing of FDI over the inbound investments, and the modification of Press Note 3 has also been seen as well. So we'll keep an eye out on this one as well. But of course, we've been tracking very closely through the course of the session today all the news around the commercial LPG crunch and the impact on the food sector, on the restaurant industry. So let's straight away go across to our expert of the day. We have Mr. Anurag Katriar, the trustee at the National Restaurant Association of India, that represents over 5 lakh restaurants and an industry that's valued at 5.69 lakh crore rupees as well, to give us an understanding of what truly is the on-ground picture. Warm welcome to you, sir. Thank you so much for taking the time out. Well, of course, since morning we've been tracking how the restaurant industry, the hotel industry has been voicing concerns that, a stopping of the commercial supply of LPG will lead to some closures at the restaurants' end. What's the on-ground picture? Have you already seen some restaurants closing because of this disruption? And what if this continues for some more days?
So thank you so much for having me here. As of now, I have not heard of any direct news of any restaurant shutting down.
Okay.
But there is definitely a lot of panic. There is a lot of panic and there is a lot of confusion. Panic is coming because we don't know what is happening next. And confusion is because various agencies are giving various pictures. We don't know what exactly is the policy of the government. We don't know because, some people are saying government has completely banned the supply of commercial LPG. Then the OMCs are writing messages to the restaurant saying, no, that is not true. It is all, then we saw some message from the Distributor Association. I think right now, what we really need to do, there is a lot of anxiety for sure. What we need is a very clean and crisp statement from the government on what is the real status. Once we know the real status, we can understand the impact, we can find solutions as well. So I think right now we are at a stage where we are all, waiting for the official words on this. There is on ground, there is a scarcity of supply for sure, but it is not completely stopped in every place. Some places, yes, it has.
Okay, so scarcity of LNG at this point in time, it hasn't stopped completely into your knowledge at this point in time. Closures of restaurants, still it's not in your knowledge. But how long can restaurants sustain with the current supplies or the inventory which is with them?
So, you have to look at it a little differently. So organized restaurants, large restaurants may have a gas bank of their own. Some of them may have the gas pipeline with them. They may last for a few more days. But my heart really goes out for those small restaurateurs, the roadside vendors, the small restaurateurs who get one cylinder at a time and they don't have an alternate source of cooking. See, in a restaurant, you may still be frying, you may still be, boiling. You may use induction as a source of energy. But for these smaller ones, it's a much bigger problem, honestly. And I think if the supply is not restored, or at least if there is no semblance of normalcy coming in, this is going to play out very differently as we go forward.
So what are the restaurateurs telling you, sir? What are their biggest concerns at this point in time?
As I said, the biggest concern is we need to know what is the stand of the government going forward. We all know there is a global crisis. We all understand the supply chain is impacted. But how is it impacting us? Tell us if commercial kitchen cylinders are going to be supplied to the restaurants, yes or a no. If yes, whether in full quantity or not, or whether in truncated quantity at a price higher or lower, whatever it is. Once we have that, then only we can devise any strategy going forward. We are in it as responsible corporate citizens. We understand there is a global crisis. We are with the government in doing whatever. But tell us the reality. Tell us very clearly where we stand.
But Mr. Katriar, was any of this penciled in when the conflict started? It's already the 11th or the 12th day when West Asia crisis, conflict has been ongoing. Of course, every day there have been, newer developments. But 4 or 5 days ago, when we actually heard about the Qatar Energy and the disruption on the LNG front, did some of the restaurateurs already started to, probably provision for what could be in the offing, or has this come absolutely out of the blue?
No, I think some of them started. I mean, whether you call them proactive behavior or hoarding, I don't know. You can choose the right word. But yes, some people were already creating some capacities for themselves.
Okay.
But by and large, we were not expecting that our energy situation is not so bad as a country. So what has come out of the blue is some circular on 5th of March which said there'll be no supply of commercial LPG to the restaurants, and that is where the panic has really triggered from. And
Absolutely.
then beyond that, so many contradictory statements coming from various authorities and no official word coming from the ministry is what is creating more confusion today.
Absolutely. If I have to ask you, in case the current situation persists, what are the chances, what is the percentage of the restaurants that will face closure?
Honestly, I'll put it in a very simplistic way. Not more than 10% of the restaurants in the country, I would assume, I don't have a clear cut data, will be on piped gas. Everybody else is surviving on the LPG supplies. And if there is a complete stoppage of that, then I leave it for you to conjecture how many will shut down. I think everybody will have to shut down. I can't be cooking without a gas, just like I can't prepare a butter chicken without chicken.
What do these situations really lead to? Is there a need for reimagination, for reinvention, to look at in this new changing world order where geopolitics has been the name of the game? What do you think the industry is thinking at this point?
Right now, I'm just hoping and assuming that this is a one off situation
Yeah.
and this is a one off crisis that we are facing. Because if this becomes a norm, then we'll all have to find some alternate source of business. Forget running a restaurant then. Because see, we may talk about alternate sources like induction and all, but they have their own limitations. They have their own limitations. Now imagine what happens if restaurants shut down. There are so many people living in large cities who are dependent on food delivery for their
Absolutely.
meals. There are students, there are paying guest people, there are so many people. So it is very, very critical. It's not
Sure.
like something which is discretionary only. If you recollect, even during COVID, we were allowed to run the restaurants because
Yeah.
government understood that we are a crucial service in the market.
Absolutely.
So I think
Absolutely.
we are hoping that some clarity will come in by the end of the
Will
day.
come in.
We have already
Absolutely.
written to the minister. We have already written to the minister a couple of days back, and we are hoping for a reply very soon.
Okay, all the very best to you, Mr. Katriar. Thank you so much for giving us the current
Thank you.
insight as to the ongoing situation. We hope that there is a resolution that's found pretty soon. Let's move on now,
Thank
viewers, and we will also get you the views of our market expert, Devarsh Vakil, who's now joining in. Devarsh, good afternoon to you. Good to have you with us. Give us an understanding of how are you understanding, gauging the situation, which has now erupted by way of LNG shipments, the shortage that has hit commercial, operations as well, QSR names, restaurant names, hotel names, food delivery names. These are the stocks that have been seen as the frontline hit ones. How are you looking at this sector as a whole?
Clearly see the escalating the hostilities in the Middle East has
Yeah.
put these geopolitical things forefront of the markets, and oil remains an immediate concern. It immediately has a transmission mechanism of all these issues in the economy. If we have seen the sharp rise and then the statement has come and it has pulled down, I assume that this volatility will sustain, but I am not, we are not penciling for a shock, because if oil shock like this were to come in, then it will derail the Indian equity story. As you just mentioned, not only the restaurants and the quick delivery industry, a lot of more larger industries like we saw in paints, logistics, fertilizer, all these
Sure.
industries are directly impacted by the import of the crude oil. And mind you, despite we have done taken a huge strides on the renewable side, we are still heavily dependent on energy, imported energy. So for the longer term story to play out, for our earnings growth, for our growth of our economy, it is important that we this situation normalizes, and then only we can have the long-term story intact for our country. If it were to sustain
Absolutely.
long oil shock, then obviously all these questions will come up, which will have a very hard answers to come here.
Right. Devar, stay on with us. The Iran war, viewers, has been now hitting your plate. The LPG supply crunch, as we've highlighted for you, has reached India's restaurant and hotel industry, raising serious concerns about the hospitality sector and how they can keep their kitchens running. And with gas banks lasting only a couple of days, the situation could turn serious fast. We've also had Amit Jaiswal, the CFO of Royal Orchid Hotels, tell us on Business Today how the industry is coping. Let's listen into what he had to say.
See, in every hotel we have a gas bank where we keep the cylinders, okay, and that will be around 30 to 35 cylinders at any point of time we keep, which we can use for at least 3 days. 3 days of consumption, 3 to 4 days, depending on the F&B outlet and the banqueting. 3 to 4 days we can manage. Now, one day is already gone. Maybe another 2 days, 2.5 days we will be able to manage. The dealers who supply the gas, they have raised their hand. They said that we don't have the supply. What do I do? So we are at this position today. I don't know. How do we do?
Right. So have you had any communication so far with the government at this point in time? What is the kind of communication has gone from the hotel, representatives to the government? What we are hearing so far is that ministry is already reviewing some of the requests that have come in from the hotel side. What are you hearing, sir?
See, our association has made an appeal to the government that you cannot stop the supply of this commercial gas. Okay, we understand you scale it down little bit, and also that we use the gases little, in a more and more efficient way. But if you stop the supply, which has already happened since yesterday, there is no supply, which means that it's a crisis situation. It's not so easy situation. See, in every household, there is one cylinder which goes for a month. But in commercial use, it's high. So today we are having a, crisis meeting, and we'll have to find out the further course of action.
Also, the government is now planning a scheme to ensure shipments to West Asia as part of its incentives for exporters. The government has now formed an inter-ministerial panel to address the concerns of exporters facing trade disruption, comprising officials from Commerce Ministry and the Shipping Ministry, also the Finance Ministry and the Reserve Bank of India. Let's listen into what's happening there.
हर एक विषय जो हमारे संज्ञान में आता है, उसमें लगभग रोज कोई ना कोई नए कदम उठाकर, जैसे शिपिंग मिनिस्ट्री ने शिपिंग लाइंस के साथ बातचीत करके शिपिंग कॉस्ट को ठीक रखना, जैसे सीबीआईसी ने तुरंत सर्कुलर निकाल दिया कि अगर कोई सामान वापस आता है तो कैसे उस सामान को जल्द से जल्द कस्टम क्लियर करके एक्सपोर्टर को वापस मिल जाए, जिससे ऑल्टरनेट मार्केट या भारत के बाजार में वो उसको बेच सके। इसी प्रकार से हम और नई स्कीमें, जिसमें इंश्योरेंस भी शामिल होगा, कि अगर कोई वेसल, कोई शिप जिसमें भारत का सामान जो निर्यातक ने बाहर भेजा है, उसपे अगर कोई आहत पहुंचती है तो उसको कैसे हम पूरी तरीके से इंश्योर करके एक्सपोर्टर्स को एक प्रकार से चैन से एक्सपोर्ट करने में सहूलियत दें, वो भी हमारा विभाग बनाने में लगा हुआ है, कंसल्ट कर रहे हैं एक्सपोर्ट क्रेडिट गारंटी कॉर्पोरेशन और अन्य विभागों के साथ।
All right, viewers, we'll shift our focus to the markets then. There is a further spurt in the markets. You are seeing that the markets are inching to the day's high, 24,293 as far as the equities are concerned on the Nifty. But there is inflow coming in, as news coming in as far as the SIP inflows are concerned. They have slipped in February. The SIP inflows have come in at 29,845 crores. This is versus a 31,002 crore rupees fund that came in as SIP flow in the previous month. The net equity inflows, however, have seen an uptick, coming in at 25,965 crores vis-a-vis 24,013 crores, again on a month-on-month basis. The AMFI, which is the Mutual Fund Association of India, has indicated that SIP dip in February is due to fewer working days. Although the trend continues to be intact, they have also indicated that silver ETFs have seen an 826 crore rupees outflow on a month-on-month basis. Remember, silver prices had come crashing down from 4 lakh rupees down to about 2.7 lakh crore rupees lakh rupees per kilo as well, and that's when we had seen some outflow take place. So let's go back to Devarsh. He's going to be giving us an understanding of how do we read the market sentiments at this point in time. It was a manic Monday, but what's panning out is comfortable at this point in time. Some signs of a reversal coming in, Devarsh, as far as the markets are concerned. Largely, this has been led by the comments coming in overnight from Donald Trump indicating that he believes that the war is largely complete. And those were the signs that the markets were truly looking forward to. How are you looking at the markets at this point in time? Do you see these SIP flows further coming back into the D Street once things also normalize?
Right. So the environment, such environment, expect us that those who are in the market with the leverage positions needs to be appropriately hedged. But sharp market dislocations like this, whenever they arrive, historically they have offered a compelling entry point for the long-term investors. So those people who have capital to deploy, and they should use this opportunity to accumulate good quality stocks, because these things are, it may last for a week, 2 weeks, but ultimately the sanity prevails, and once these commodities come back into their longer term trading band, equities offer good opportunity for the long term investors to accumulate wealth and grow their capital. So I would say it is difficult. It is emotions are needs to be kept under check. We should not take any hasty decisions, because there are sharp dislocations. Earlier, when we saw in January, February, gold and silver had a large rally and a fall. Now we saw in a day crude oil going up 30%, coming down back to the same level. So these are times where you have to keep your emotions under check and keep an eye on the longer term picture. I think such opportunities are good for long term investors, and SIPs, I think it is a matter of few weeks. Ultimately, I think this number will eventually stabilize around 30,000 crore and eventually go much higher from here. I won't be surprised that in few years' time, this number will rise from 30 to 50,000 also per month as the financialization of saving happens.
Okay, so Devarsh, in this kind of a market, what are you really looking at? Are you already scouting for buying opportunities, looking at the worst of the impact of the war, probably might be also already penciled in into the markets? Looking at that fact, what are you investing in right now?
Assuming that the situation doesn't worsen, see, Nifty has corrected almost 2,000 points in last 3 weeks. So this is a sharp fall, and obviously it has created opportunity in many sectors. There are fears that maybe because of the higher inflation, there could be rise in treasury yield. We have a variable perception that I think the Indian government, especially RBI, is in the market to control the treasury yield, and that means that the fall which we have seen in some of the financials, many PSU banks, many NBFCs, are a great opportunity to accumulate even for the next few months. By the time we see our March quarterly result come into the markets by mid-May, we may see these numbers surprise street on the upside. So in this fall, I would say financials are a good place to start accumulating.
All right, we have ended the day on a positive note, 260 points higher. So we'll wrap up the trade and we'll come back to Devarsh for your queries now, viewers. So 24,288, that's the last point on the Nifty today. 1% higher is what we've achieved after a lot of choppiness through the course of the session today. The Nifty Bank has also supported this move. Look at the kind of rally we've seen there and a rebound there. Almost 1,000 points higher for the Nifty Bank. Remember, this was the biggest hit index yesterday. Even the auto index that was dragging truly yesterday is up by 3.2%. That's driving from the front. The PSU banks up by 2.3%. Those are the sectors that are truly supporting the move. And this is what Devarsh also pointed out. Financials is where he expects the next move to continue. Broader markets also improving 1.8% higher for the mid caps. Small caps also up by 2.3%, ending at the day's high level as far as the mid and small caps are concerned. The defense index also managed to move up 0.7% higher in trade. All the sectors barring IT and oil and gas have moved up in trade, but these are the top winners on the Nifty in front of you. 7.5% rally for Shriram Finance, Hero Moto up by 4%, Eicher up by 3.5%, 4% as well. We're also looking at M&M. Indigo also rebounded in trade today. Asian Paints, from the crude derivative impact, is finally seeing some light because of the crude oil prices ebbing lower. SBI Life 2.6% higher in trade as well. So those are the winning names in front of you right now. But Infosys continued to drag. Zomato down by 1.2%. Reliance Industries also gave in under pressure, 1% lower in trade. Bharti Airtel, so big heavyweight names that have dragged and may have probably capped the kind of rally that we could have seen otherwise if they had also participated. Because look at it, Reliance, Bharti Airtel, TCS, all these heavyweight counters have in fact been the top losers in trade today. But let's go across to Devarsh again and take some of your queries, viewers. Shivam from Kolkata has sent the first query for you, Devarsh. He asked that is the worst is over for markets and should I start investing for a 1-year time frame at the current levels?
I think so. See, we do not recommend that you go and put all your capital now, but whenever we have such sharp falls, it's a good time to accumulate. And history has suggested that systematic investment plan or the rupee cost averaging is the best way that you also take benefit of such fluctuations. So I would say go out and start investing. See, in times like this, we need three things: cash, courage, and conviction. Now you are fortunate enough to have some cash on your hand. I would recommend you to go out and start deploying.
Okay, next we have Pratik from Lucknow asking you a question that I'm a new investor. I am now planning to invest 1 lakh rupees in equities. Can you suggest few sectors to invest in at the current levels?
Right. So if you are a new investor and if you have a lakh of rupee to invest, I would suggest that rather than going directly into equities, you can go to index funds. Nifty and other ETFs are available, which are low cost and which will give you market returns. So you are not trying to outbid the market right now. Have some experience, have knowledge about markets about a couple of years down the line, and then you start either picking direct mutual funds or directly going to equity. Right now, safest way to start your long-term compounding journey is through SIP into some index funds.
Okay. Satvik from Agra, that's the last query we'll take with you, Devarsh. This is a question on QSR and the restaurant stocks. He asks, will QSR and restaurant stocks fall further after the LPG crisis from here?
So yes, if there is a further crisis and if supply is not restored to them, I fear that there will be more fall, there will be some closures. But see, good news and good prices do not go together. So when there is such a short-term disruption in the business, that's a time when you will get good stock prices. So at that time, I would recommend you to, if it were to materialize, go out and buy companies where you have confidence in the management, confidence in the business model, and if valuation is in your favor, I'm sure you'll be able to invest at a good level and earn good returns out of it.
Fantastic. Thank you so much, Devarsh, for being with us on the show and, of course, passing all these insights to our viewers as well. With that, viewers, it's a wrap on the Business Today show. In case you too have any questions about your investments in mutual funds, SIPs, stocks, or gold-related queries, then send them to us on the number that's flashing on your screens. With that, it's a wrap. Many thanks for tuning in. Don't forget to tune in tomorrow morning at 9:05 a.m. to catch all the stock market opening action.
Presented by National Stock Exchange.